Okay, hi all. Welcome to Strategy 3. I think up to now we've highlighted two different moving average crossover strategies, simple yet effective ways to use. Now, both of the previous two are probably best used in conjunction with the Telegram opportunities that we highlight every day. And so what we've tried to do with the Strategy 3 is just show you how we can use a simple moving average crossover technique using no other indicators other than price action. For those of you that prefer to trade your own pairs as opposed to the high probability pairs that we highlight, but also some of you don't really want to scalp. So we've just shown you a technique here that allows you to use a form of moving average on a longer time frame, whether that being a day trader, whether that being trading once a week, or even how to trade once a month. We've also adapted it to make it a highly effective strategy whereby those that become more advanced as you start perfecting or mastering your technique or craft, you can add a new element to your trading, and that would be how to add trades to your current position as you go in the money. Okay, so for those of you that have traded moving averages for a prolonged period of time, there's always that question that gets asked: what is the best combination of moving average for a crossover? So some will say 5-10, some will say 6-12. You would have heard some say 20-50. The truth of the matter is, guys, is that there isn't really a answer to that, in that there are actually many different combinations that work, and I suppose that will all depend on your personality. Strategy 3 is going to include something called the Guppy moving average strategy. Now, Guppy is named after a famous trader in Australia called Daryl Guppy, and what he did is he highlighted the fact that we can use multiple moving averages for a crossover, which will give us a number of things. It will give us a more consistent entry. It will allow us to identify trends. It will also allow us to identify laddering opportunities. Okay. Now, not only is this can be used as a day trading strategy, it can also be used as a multi-time frame strategy. Okay, so we're quickly going to go through the dynamics of this chart or strategy. Again, don't be too phased about the complexity that it may look like, because we have created the template for you, which you can add to your MetaTrader, and you can go through those as you in your own time. Okay, so first things first, we've got a price chart. Again, guys, it's just a candlestick time frame, and again, guys, this is probably used best off the hourly chart. I will show you how you can incorporate a 15-minute chart. It's also best used on a 4-hour chart. Okay, so first things first, guys, what we're going to do is we're going to add 6 short-term moving averages, and then after that we're going to add 6 long-term averages. Okay, so the first one here, you can see an array of moving averages on the 15-minute chart, guys. These are all simple moving averages. First one being a moving average, a 3, a 5, let's see if I can put it on here, a 5, an 8, a 10, a 12, and a 15. Okay, so you have some pretty popular short-term time frames within a traditional moving average crossover technique. Okay, so we've got 6 short-term moving averages. We then add our long-term moving averages. Okay, and I'm going to put those in blue, and there you can see it there. Okay, so what we have here is, let's just pop it on there, a 30, a 35, a 40, a 45, a 50, and a 60 simple moving average. Now again, those may sound quite familiar to you. For those of you that have used moving average crossover techniques, those are probably some of your more popular longer moving average period, moving average levels that you'll have there. Okay, so what we've done is we've created 6 short period moving averages and 6 long term moving period averages, guys, and then we just combine the chart. So there's a couple of things that we want to monitor here. Okay, let's just pause this chart so we can go back. As per a normal moving average, guys, a cluster, okay, a cluster of moving averages indicates when we will be looking for a price reversal. Okay, so again, if the short term crosses below the long term, so the purple closes below the blue, and guys, we're looking for all 6, all right, all 6 to close below the blue. That would indicate we are looking for a short trade. Okay, so we have a cluster formation which indicates a potential moving average crossover is on the horizon, so a trend change. We then wait for all 6 to cross through, and guys, the more clustered the better, and I'll come to that shortly. Again, on a long trade, let's just see if there is a long trade here. On a long trade, it'll look something like this. Okay, so all purples to cross above the blues. Kind of happens over here. At that point, we are looking to go long. Okay, so simple moving average crossover technique that we have covered a lot of times within our particular strategies. But a lot of you will be familiar with this technique already in your own personal capacity. Okay, so why do I use the hourly chart? Guys, if you go down onto a short time frame, it's just too much that is left for a little bit of determination. So it might not be as objective, and that's kind of not what we're looking, especially for those of you that are new to trading. Okay, so I would use the hourly chart. I will also illustrate in time when there's a use for a shorter term frame. Okay, now once you're in a trade, guys, we can see the bigger the gap between the purple and the blue. Okay, so here you can see quite a big gap. Okay, that would illustrate that we have a stronger trend that is starting to form. Again, on this particular pair, we're in a current trend. Okay, so we can see here strong trend, as well as here strong trend. All right, so if you're on an hourly chart, and remember we have multiple instruments covered on the MetaTrader 4, I suspect that every week you will find a nice deep trade that may offer you multiple points. Okay, so first things first, guys, I'm just going to show you a quick way how to use if you're looking for a day trading strategy. So maybe you're going to get 2 or 3 of these trades a week where you're only in for the day, and then I'm going to teach you how to maybe use this as on a multi-time frame, whereby you're in for 1 week, for 4 or 5 days, and you keep on adding to your position, or perhaps you want to trade for a month and you keep on adding to your position. Okay, so we'll go through that. That may be a little bit more of an advanced technique but I think it's worthwhile showing you how multifaceted this particular strategy is. Okay, so first things first, guys. We can see here, this was on Sunday. We can see a couple of things. We have a nice mix, or a nice combined or tight trading visual here. We can see all our moving averages are intertwined with each other, and that to me suggests, guys, that we have a nice looking trade on the horizon. Okay, so what am I looking for? I'm looking for two things. Number one, I'm looking for all my short term, so short term, to cross over, okay, through my long term. So in other words, I want my purple to cross through my blue. Okay, purple below blue equals, you guessed it, short trade. Why are we short? Purple is below blue. When purple crosses above blue, okay, I put the arrows in there so it reminds you in what direction you're taking the trade. You're looking for a long trade or a buy trade. Okay, so we have a nice looking trade there. Okay, second parameter that we are looking for here is we want a candle close, okay, below all moving averages. Okay, so we don't want a candle, a nice big candle, and we jump the gun and we get pretty excited taking a trade. Okay, candle below all moving averages before we take the next trade. Okay, so on this particular chart, what we can see here, it's pretty tempting to take the open of this candle. Guys, not a good idea. Why is it not a good idea? We can see that not all our purples have closed below the blues. Okay, well, they're still pretty much intertwined. At what point do we get that crossover? Guys, we get that crossover round about this candle. Okay, at this candle we can say for certain that all of our moving averages, our short term, in this case the purple, have crossed over through the blue. We can see that because there's a nice little gap that confirms to us that a new trend has started, and we have a beautiful looking intertwined that moves into a gap. Okay, this is not a nice looking trade, guys. Why? Because they're not really intertwined when they break through. Okay, so we want something that looks tight and intertwined and then breaks through, almost like an explosion, so to say. Okay, so we then take our trade on the next candle. Here, there you can see our entry on the right hand side of my screen, 197.35. We will just round that down to 197.35 for illustration purposes. Okay, then just like previous strategies, we can use a stop loss that is equivalent to our previous high, okay, for a short trade, or our previous low for a long trade. So on this particular trade, and you can see that, guys, when our purple started to top out or start to form a little bit of a dome shape to illustrate that price momentum had started to slow. Okay, so there you have it, guys. We have got an entry of 197.35, 1.9735, and we have a stop loss of 1.9815. Okay, so that gives us a stop loss of around 80 points. Because we're trading off the hourly chart, guys, I know a lot of you are tempted to day trade this and get up before the end of the day, which you certainly can. Often you'll get that opportunity because you've got in at the start of a trend, and that's when the trend is probably its most lethal, so to say, because it's this volatility, this breakout. But I would suggest if you're going to trade a 1 hour, a day trade, you're looking for a 1 hour. Okay, so 1 hour means for every point you risk, you're looking for at least one reward. And in this point in time, you've risked 80 points. So here you would want an 80-point stop loss. Now, take profit rather. Now that would be a day trade. Okay, so we'll go through that example now. So that would be around 96.50 would be your take profit. And let's just pop that on there. Okay, so here you can see, guys, you have your entry at 97.35. You had a stop loss of around 80 points, and there's your take profit. So within the day, you got a nice handsome profit that took you around 80 points, so it took you about 2-3 hours, which are very, very nice trade. You've banked your 80 points profit, which is a wonderful opportunity. Okay, and then you can look tomorrow for a similar setup. Okay, so that would be a nice technique for someone that is new to trading. It's always a nice feeling to have banked profit. For those of you that have a slightly different personality where you don't mind holding a trade overnight, the second one to do would be, instead of using a 1 hour system, okay, I don't mind holding it for 2 or 3 nights. My philosophy is here, once we know we're in a high probability trade, once we know that we're in a trade that's at the start of a trend, instead of looking for a trade tomorrow, I'm happy to hold on to the trade for another day. In that case, I'm looking for a 2R. Okay, so 2 times risk. We have risked 80 points. Okay, so in actual fact, what we're looking for is 2 times 80. So our take profit would be 160 points. Okay, so for me, that's possibly a nicer trade to get into. 160 points for the week. You can even call it only one trade a week, guys, and that's a great return. You making those kind of returns every week, your account will grow quite considerably over a short period of time without you even knowing it. Okay, so let's see how that takes effect here. So that was 80. We want to go a further 80. So we are going to go 96, 95, 30. So there we go, 95, 50-ish. So that's around 160 points. Actually, that's 180 points. So there you have a 2R. So within a day or two, you've been able to get a nice 160 point return in this week. Okay, so great and quite easy to see on a short trade. Let's quickly use an example of a long trade here, and I can find one within this particular so let's quickly just find a long trade here. Okay, so this was a January trade that we found here earlier in the year. And again, guys, you can see all those same mechanics starting to present itself. Okay, so we have this period where there's indecision. Okay, at no point here were we able to get into a trade, because at no point did all of my short term, or my purple, cross over my blue. Okay, when do we get that, guys? We have that period of indecision, again like we saw in the short trade, and then we finally get it around this opportunity here. Okay, so that's when I finally see purple crossing over blue. I also have a nice little gap here between blue and purple, which illustrates to me that we have the start of a trend. Okay, so quite simple to see that. Where would my entry be? My entry would be at the start of the next candle. So let's call it 196. Let's call it 197. And my stop loss would be by the previous low, because I'm looking for a long trade. So 96.14. Let's call it 96 just to round down. Okay, and this one we said we wanted 97. So we are now looking for 100 points. Okay, so why am I saying 100 points? We've got our entry equals 1.97. We have a stop loss of 196, which gives me 100 points. Okay, so if you are a day trader, you are looking for a 1R, which means that you're looking for 100 point take profit. Relatively simple there, guys. Within the day that you got into the trade, there and thereabouts, you received your 100 points for the trade. Okay, so a great return there. All right. If you are looking for a 2R, because you don't mind holding it for a day or two, you can see you're in the start of a trend, you've already got 100 points, so you want to hold on to it, maybe get 200 points, finish for the week, as opposed to come look tomorrow. You would then be looking for a 2R. Okay, so a 2R, we said was 2 times 100, because our stop loss is 100 points. So we are looking for 200 points take profit. Overnight, we are looking for now 199, and there you can see within a day. I mean, guys, this is basically a 24-hour period. You've made 200 points out for the week. Okay, so great strategy here. 2 ways you can use it, guys. You've got a nice visual on when to get in. You've got some beautiful rules that allow you to see not only a clear-cut entry, but also you want the gap so that you know when there's a trend starting. It allows you the entry. It allows you to see the take profit. And by using a 1R, whether you're a day trader or you're happy to hold a trade for 2 days, it allows you to get a nice take profit. And that's all on the same chart, guys, which I think is a added benefit or luxury. So again, a dynamic strategy. Now, within this, guys, once you become more advanced and your account is bigger, there are certainly other ways to use them. We'll just run quickly through this example here. What you can see, guys, is let's just say you've entered a trade over here, and this was the example this week. All right, you then get to a point where your price starts getting into those long-term moving averages, so they start trading within that blue. Now, a lot of you might say, okay, I need to get out of this trade, but guys, what you can do is add to your position if the opportunity arises. Okay, so I'm just going to put in 2 lines this week. Okay, we can pop that in there, and we can pop that in there. Okay, these are 2 specific weeks, specific days where price jumped in to those longer term averages, which started to raise some alarm bells for me in terms of when to get into that trade. Okay, at that point, guys, we can drop down onto a 15-minute chart. And as you can see here, what I've done is I've added a stochastic. Why have I added a stochastic, guys? Because it just gives me an illustration of whether we can get into a trade. So what do I do now? I wait, and exactly like I did on the hourly chart, I see if there's going to be another crossover. Okay, so I can see within this period I'm topish, I've got that cluster. Two things can happen, guys. Either we are going to close our position for a nice take profit, or we're going to add to our position around these levels. And what does that tell me, guys? That tells me that I'm going to move my initial trade to break even, and then I'm going to add to the position another short, and then once I've got my other short, and we can just pop that over here, go onto the hourly chart. Here you can see I had that initial scare, I've added to my position, so now I've doubled the position, but my first position is locked in. I've moved my stop loss to break even, which means that I've got a guaranteed money in the trade. Okay, second of all, there you can see it again. I'm willing to bet that if we drop onto the 15-minute chart there, we will see again another situation here, guys, where we are able to add to the trade using the same technique. Okay, so we add to the trade. Now, when we see this example here, you're going to see that we are well in the money. Okay, so at this point, guys, we've got 3 trades open, but essentially we are well in the money. Okay, so our first trade we got in here, and our entry was at 197.38. At that point, you can see that we are 200 points in the money. We've essentially moved our stop down to 96, let's just say. So we have guaranteed ourselves, okay, 100 points on trade 1. So trade 1 equals we are guaranteed 100 points. Trade 2, we can see we got in around these levels. We're now at these levels here, so we're in for 120 points. We might have moved it down, so we've guaranteed ourselves 50 points, guys. So we've now guaranteed ourselves 150 points. Okay, so on trade 1, we've moved our stop loss. We've moved our stop loss down, and we've guaranteed ourselves 100 points. Trade 2, we've moved our stop loss to 50 points in the money, so we guaranteed ourselves 50 points. And as you can see, by the end of the week, guys, we're at 91.18 with an entry of around 94-ish. So by that point, this is about 300 points in the money. This is 5, so you kind of made 600 to 700 points in a week. So that's how you can see how to add to your position. But for those of you that are new to trading, guys, I would definitely use this as a day trading strategy. You will probably find 2 to 3 of these opportunities every week across all the instruments. All right, so there you have it, guys. I think this strategy has got a little bit for everyone. It's got a little bit for those of you that are new to trading and you just want to master that technique of moving average crossover. This allows you to have a more conservative entry. For those of you that are more advanced at trading, it's a lesson on how you can use a moving average crossover to add to your position. All right, so there you go. Template is also included here. Good luck, guys, and we will chat to you in the next strategy, in the strategy 4.